Okay, so dude, Kyle, awesome to have you here, man. It's an absolute pleasure. Cool name, I like it. So, tell me, I want to hear the answer to this question. If somebody were to ask you who you are, what would you tell them?
Yeah, I think first and foremost, thank you for having me. Always a pleasure to see another Kyle. But I think first thing I always talk about is my family. I am one of five boys in my family. I'm married with three kids. I live up in New Hampshire. Everyone kind of lives pretty close and is around each other. I grew up in a small family business. I mean, my current business has my name York, York ID in its title. So I kind of revolve everything around sort of the family and what I'm playing for and the impact I can make on my community and the space I'm in. And I think that's number one, what I focus most on.
All right, cool, man. So, what about what you do? Let's get into that part of it.
Yeah, sure. So, I've spent my entire career in technology and software and startups.
Mm.
So my firm is a advisory and venture capital firm for technology companies. Today, we employ over 175 people globally, and we provide what we call advisory as a service to technology startups to help them with product, go-to-market, finance. And then we also have a venture capital arm where we invest in pre-seed, seed stage, B2B software businesses up and down the stack. So really wanted to create a model where we could bring a lot of operational support and infrastructure as operators ourselves to founders and entrepreneurs and helping them build their businesses and reach as many startups as possible through that model.
I like it, man. I like how you don't just provide the cash, but you also provide the advisory angle of it. So let's get into that a little bit. When you look
Yeah.
at a company, and we'll get into the investment side later on, but I want to
Yeah.
look at the building of it and what you do to on the advisement side. What do you look for, first of all? How do you know what to start changing, what to tweak, what to improve when you look at a company?
Yeah, I think it comes with a lot of experience. I've spent 20 years in technology companies and I I'm not an engineer. I have a marketing degree from a business school, and I kind of came up in like sales and marketing functions, and then sort of became a more broader business leader as you get into leadership, right? You need to start to know how to run and manage a P&L and how to think through capital strategy and runway and how to do pricing and packaging, how to build products and listen to customer feedback and build roadmaps and execute. And so become much more generalist as a tech executive over time. And I think, we've established a lot of like processes and methodologies and philosophies on how to build and scale a startup. So, we're pretty good at being able to diagnose, strengths, weaknesses. You also find that a lot of founders are pretty self-aware about where they're performing and where they're not. And it's a very collaborative, we call it, consultative sales process when we meet a new startup about how to help them. We also have to stay pretty true to the lanes in which we actually have capacity to help, right? So, we do a lot in product development, software engineering, AI, data automation, a lot in go-to-market, marketing, demand generation, sales structures, comp plans, website development, digital strategy, demand gen, so it kind of works across like both ways, right? Defining what you do really well, working with founders who are self-aware and can kind of help you self-diagnose where they need help, and then finding the match of where we can help these businesses.
Okay, so what do you look for? Let's say we could take one specific example.
Yeah.
You're going into a company and you take into account the specifics of what they're good at, what they're not good at. How do you look for what to optimize? Where do you start with the whole analysis process? And then we can kind of walk through the optimization.
Yeah. Yeah, I think it's twofold. I mean, I think we call it the market in approach to company building. So I think one way to look at it is understanding the market landscape, the competitors, the comparators, the different stages of the startup life cycle that those companies might be at, and then sort of taking that market perspective, that total addressable market, that service addressable market, that client base, and looking at it like sort of outside in.
Mm.
The other way is clearly through the kind of like financial KPI metrics out, right? And kind of looking at what's working, what's not working, whether that's customer acquisition costs or whether that's expense allocation by class, or whether that's retention and renewal and expansion metrics. Like, you can kind of like look at companies kind of both ways, like study the business from a financial performance and metrics and KPIs perspective, or look at the market landscape inward and see how companies are performing. So, it's definitely more art than science, I'd say, in that phase of things. But once you can kind of hone where a company might need support, and if we can help, through our subscriptions to our services, you just kind of get off and running. And then it's startups, right? You need to also iterate over time. Like, you might not get that diagnosis perfectly right, and you might have to bob and weave a little bit on what you provide. But in the end, that's the life of startups. There's no like linear perfect path to success.
Yeah, true that, man. If only there was, if
Yeah,
only
if
there was
only
the
there was,
instruction
we'd all
manual.
be,
Yeah,
yeah,
man. Yeah, hey,
exactly.
hey, do this, and then get that. Okay. Nope, doesn't work like that, it turns out. But I like
Yeah,
what.
the way our model works is, we try to be pretty flexible in our engagements. We call our operating business an advisory as a service platform, and we have sort of piece parted a bunch of different service modules
Right.
that have different tiers of service based on your needs. So we definitely have to like define that scope of work and do some work in the sales process. Sometimes though, we don't know exactly, and the company doesn't know exactly. So we do a corporate strategy deep dive as a project many times, especially with larger clients who just need a third party independent set of eyes that maybe isn't their private equity firm, or isn't on their staff, who might have some sort of like institutional bias, right? So we might go into a 30, 60, 90 type project, and then through that say, here's the areas we think you need to work on. Oh, and by the way, here are a few areas that we might be able to work with you in a subscription model in an ongoing way. We'll do that. I mean, also sometimes during engagements, let's say we're working together on marketing or digital marketing or website work. We also will sell what we call bursts, which are bursts on top of a subscription. So like, we might diagnose that like, holy cow, you guys need help on UI UX or pricing and packaging, or infrastructure optimization. You're spending too much on AWS or what have you, right? We'll learn things along the way, and sort of having the resources available to access, I think, is what most startups don't know where to go, where to turn. And we've just tried to vertically integrate those things together to make it easier for startups.
You got a nice business model, man. Not only are you helping finance, you're also helping with the advisory side, yes, but then you've also got the suite of subscription services that you give. So it's like you got the whole ecosystem, the flywheel spinning, baby. You got the whole thing, each piece working for each other.
Yeah, you've noticed it. I mean, I think it's funny. We launched this firm in late 2019. It was on the backs of our operating careers. We'd helped build a company called Dime, which was an internet infrastructure company that we scaled up to 100 million ARR and sold to Oracle in late 2016. And I was chief revenue officer there. So all the learnings of that, um, along the ride doing that, I started to create different investment vehicles and do advisory work more in a moonlight capacity. So the dream of this business was to like do it full time, right? Could you create an operating business that's still us
Mhm.
operating, building a startup? That's the advisory as a service model. Every day I wake up as CEO of that firm, and I'm like, how do we bring on more clients? How do we service more clients? How do we, improve our NPS? How do we hire and retain the best people? How do we scale this business? But when we launched it, it was really looked more like a seed investor with an operating arm to help the startups. And my whole vision was always to build the operating business, the advisory business, big, like a McKinsey Accenture for startups, and then have investment arms that are available to invest in our
Mm.
favorites within our thesis, right? As we've grown and gotten to scale and the flywheels got moving, I think that's what it is. But it's been certainly evolutionary in the last 4 years since we got this thing off the ground.
Freaking badass, dude, what you've been able to accomplish. No kidding. In 2016, you were able to grow something even 8 years ago as the time of this recording, and then you were able to take those lessons that you learned and build this infrastructure, this platform that you've got that kind of funds itself in a lot of ways. It's very cool. What were
Yeah,
some?
we did the 2016 sale. We actually stayed at Oracle. Oracle bought us $600 million
Ah,
exit. Then we stayed there
wow.
till late 2019, and then we launched York IE. But York IE was
Mm,
like sort of happening in the background, right? It was like because it was the manifestation of a lot of investing in advisory and board governance roles that were like moonlighting just as a part of the ecosystem. But the foundation got big enough where we could leap into it full time and really like instantiate the business model in late 2019 and into 2020.
You talk about it as a thesis, and then you're kind of looking at it from the scientific model. How do you look at the whole business creation and optimization and building as a whole? Do you look at it with the scientific model in mind? What's the overarching mindset?
Yeah, I mean, I think it's a great question. I think from day zero, there was sort of like a vision that the institutions and that are purpose built to support companies really don't exist for them in the earliest stages of growth, right? You've got to like earn your way into relationships with major analyst firms or major management consultancies or major investors. And so like, where do you turn to when you're a new idea or a few million of revenue or just getting off the ground for help? It tends to be very siloed, consultants, advisors, fractional this, fractional
Yeah.
that. And I wanted to try to create that resource hub, that one-stop shop, that infrastructure,
Mm.
for companies that maybe, didn't want to, join the pay to play movement of analyst firms or management consultancies and all that. So I think there's like a big vision there that's like, okay, how do we become the McKinsey Bain for startups, right? Like it's one thing to have that vision. It's another thing to like execute towards it and actually have proof points. I think the proof points, that's where it gets a little bit more scientific, both in the when I talked about that kind of marketing approach. Like we have to do that for
Right.
ourselves, right? We need to survey the playing field. We need to see who we actually compete with at the stage we're at, the size we're at, and look at that marketing approach to company building. How do we package, price, position our own services? How do we build this model? But similarly, we got to follow the data and the metrics and the financial performance, right? Like, for example, we have our firm is about 175 global people, but we have 120 in our India operations center in Ahmedabad, Gujarat. And so that all of a sudden we started to get incredible traction with clients on full stack app development. And that's become our biggest growth driver. And so we put a lot of our resources towards scaling systems, processes, talent, leadership in India and how that interfaces with our onshore offshore model. But when we launched, it was I was a former CRO, and my co-founder Adam was a former head of corporate comms. Like we launched with a lot of like marketing, go-to-market oriented advisory services, which we still offer, and they're great services for the startup ecosystem. But following the data and the performance, it's where it gets a little bit more scientific. Where you say, where do you put a
Mm.
dollar to get a dollar out, right? And so yeah, we're no different than the companies we advise or the companies we invest in. We have to look at our own business with the same lens and continue to learn from the market and from our customer base and grow, right? Not easy, right? Especially over the
No.
last couple of years and this economy and this kind of weird world as it relates to like, public tech stocks to IPO windows to M&A down to early stage funding. It's been 24 months of sort of stall, but we're seeing a lot of signs of momentum coming back.
I could have used you guys a couple weeks ago, man. I was just hiring a full stack dev team for a client's project. We're building a big AI project, AI website, and it was a pain in the ass to find the right dev team. But see, because you got to piece them together yourselves, and then what you're doing is you're finding that cohesive package that you can deliver on a silver platter to people, which is it's needed, man.
Well,
Because
we'll stay in touch for
hard,
future. I think the also it's like I find that like there's a lot of silos that happen in the industry where like
yeah,
part of building a great new app or a great new AI website is you also need messaging and content and you need to think about digital
yes.
demand generation and landing pages and how that integrates with your CRM system and your financial systems and your billing systems. And I think that's why we specialize so much in SaaS and B2B software, because it where the web app begins and ends and where the SaaS app begins and ends and where the
Hmm.
infrastructure and IT automation begins and ends is pretty blurry, right? In a subscription
Yeah,
business model.
yeah.
So that's why I think just having those capabilities, when we tend to find that like clients are more anchored in one service or another, like it's a go-to-market client, it's a marketing client, it's a dev client, it's a finance client, but having the other capabilities to layer on or complement, I think is really, really powerful.
How do you, because a client will come to you looking for a specific job completion. How do you kind of upsell, if you want to use that term, expand the scope of services that you're offering to somebody? What does that conversation usually look like?
Yeah, I think there's like a couple different ways it happens. One way we're trying to get better at is the more proactive way where we just do like customer marketing and client service outreach, and just to be like one step ahead of them to know, so the client actually even knows what capability and capacity we have, right? Like when you're a startup, any startup, but certainly we feel this, like you have to continually evangelize and tell the market what you do over and over and over again. And when you're fast growth like us, you're always kind of like adding new capability that didn't exist yesterday. So you have to do a lot of like remarketing, re-education, even to your own client base. So that's like an effort to be
Mm.
more proactive, which I think any company is trying to do with their existing clients and past clients and prospects and all that. But also, being very, very, very like engaged in the conversation to be reactive, right? We find that a lot of times we're building a brand new app for somebody, or redoing user interface for somebody, or updating messaging and positioning, or doing a press announcement around a capital fundraise. And then they tend to lead to, oh, hey, well, could you also help us with executive programs, thought leadership, or hey, could you help us for doing international expansion into Europe? Do you have any ideas on strategy of how we could structure the teams and the pricing, the packaging there? So you have to kind of have that ear. Even if I'm a strategist who works on dev, I need to have the ear to say, oh, they're asking about messaging and positioning. Let me pull in the other strategists on those teams and see if we can upsell, cross sell. Obviously, doing it with startups in a tactful way where you're not like ambulance chasing on
Yeah.
issues, or over trying to sell to them who
Yeah.
are very busy. I mean, our whole positioning is at the earliest stage companies, we are really, really good at like being like a Swiss Army knife for what you might need, and being able to, kind of, iterate and shake up the ball a little bit on like what they might need. Later stage, more heavily funded companies who already have like leadership in place, they're always looking for third-party vendors. It's just about being a little bit more surgical about those engagements, and trying to identify as quickly as possible where we might fit, because you might end up chasing your tail on some of those if you're not careful.
Mm. Now and then trying to get as much as you can without being coming across as pushy, or it's like then and you want them also. It's the balance you got to strike, because you got to let them know that, yeah, we offer this, you can come to us for this, but without being like, okay, so what else can we get? What else can we do for you to get some more money out of you, kind of a thing, right?
It is
Delicate
a
balance.
big time balance. And, I
Yeah.
think coming from being software SaaS subscription business model operators, like I actually think we try to care more about the sticky recurring revenue nature of the business,
Mm.
and not just chase the quick buck. But wants to grow and hit the numbers and hit the gong and celebrate
Yeah.
wins. And
Yeah.
so there is an absolute balance of that. I think this all just comes down to, especially in a more like service heavy offerings like we have, like I think it just comes down to communication and transparency. And also like having competitive differentiation, like why, like we have a lot of uniqueness to how we're like different and we think better than the other alternatives. But again, you have to kind of continue to reiterate that in a thoughtful and tactful way.
Do you do it typically at the beginning of a project, or after a project's been completed, then you can kind of expand the scope of what you can do for them? But, also still as you're moving through the project, letting them kind of percolate on the fact that you do offer these services? I mean, at what time stage do you kind of bring up the fact that you offer other things?
Well, so there's kind of two ways you engage with us immediately, right? Like that whole scoping thing we talked about earlier, and like the diagnosing, like we can either do that like a sales process, or we end up doing what we call a wedge, like a project for that 30, 60, 90. In both those situations, we tend to want to just execute for a period of time and show our results and our collaboration and our
Mm,
value, right? So we don't try to muddy the waters and say, do this, this, and this with us, or do way
mm.
more dev with us, or way more marketing with us until we've hopefully earned it. So I think there is a balancing act of making sure we execute on the wedge project, or execute on the initial subscription before you kind of hop in there and try to solve all these things. just one thing we've done that's been helpful, and this has only been able to happen over the last year with some scale and success, is we've been able to start to build out a centralized kind of go-to-market and client success organization. Think of
Ah,
like CS as like a hub to all the services you might have. And this is something I learned. We have a group of strategic
mm,
partners from Deloitte. Deloitte's obviously 160 years old, 170 billion in revenue, different scale, but and different set of services. But they sort of, I ask a lot about how do you keep like the growth going and all that, and they talk a lot about their CS client services organization as the hub to
mm,
the spokes of the services they offer, and that hub being the relationship manager and account manager really helps keep that proactive and reactive comms going. That's separate than the service executors who are working on delivery, right? That's a different muscle and a different focus. So I think having kind of both and complementing is
mm.
really how we've approached it. And we've just, again, like I said, only recently with some scale and success, been able to invest in that hub.
Hey, I hope you're enjoying the podcast, and I want to let you know that I've got a free book that you can get if you want to tap into more of these resources. And you can get that for free at kylesbook.com. Back to the podcast. It's interesting, man. That hub is fascinating to me. But you also have to be careful because you want to be known for one thing. As you grow, then you can kind of add more spokes to it. But, it's easy for any of us to go on, let's say, Upwork or find a dev team that we work with and then have spokes kind of added on as we need them. But then you're kind of diluting what you're known for in the marketplace, the core, the center of
Yeah.
the hub, right? So, from a marketing point of view, the branding and the positioning point of view, you got to be careful because example that comes to mind is Honda in Japan. When they came out, they were a motorcycle company and they couldn't
Mm,
sell Honda cars in Japan because they were known as a motorcycle company. Nobody wants to buy a car from a motorcycle company, right? So they had to come to the
yep.
States and then brand themselves as a car company to be able to
Wow.
get the market share that they're at. So you got to be known for something and then be careful how you kind of expand out because you got to have that mind share space in the consumer's
It's
mind.
a no, it's a heck of a point, and startups really struggle with it as they grow because, like, you want to be able to. I always say there's three types of startups, and startup one is like massive vision, like sort of pie in the sky disruption, but I kind of don't know what you do right now today and how you're going to ever get there, right? That's startup number one, right? Startup number two is like small vision, maybe like niche industry or niche product or niche use case, but very clearly I understand how you're going to build that or execute towards that, but I'm not sure how big the market opportunity is or if the vision's big enough.
Hmm.
And the best companies in the world are the number three, right? Which is both. They have great vision, but they also have clear execution plans today that unlock the next stage of their growth, that unlock the next stage of their growth, that unlock the next stage of their growth. um, to do number three really well, you need to have incredible messaging, positioning, clarity of vision. We've actually redone, for example, all of York IE's like messaging and boilerplate, but it's funny, it lives across our social right now, but our website's still being developed. So it's only like partially made its way into our new website and messaging that exists there. So, it's always a moving target. I think you really need to refresh overall messaging positioning every 18 to 24 months. You need to try to stick to it for a while, but obviously continue to evolve it as you continue to learn what's working in the market.
Yeah, I mean, we got to be careful because shiny object syndrome. It's like, especially as entrepreneurs or founders, it's like, okay, there's a lot of exciting stuff going on. You got to be careful what you focus on. Speaking of focus, one of the things that you said was when you look at a company, you're looking at it from outside in, right? And then you kind of strike the balance from inside out, which is an interesting perspective to look at that. But it's hard as hell to look at your own company from outside the jar to see the label, right? How do
Yeah.
you do that with your own company, for example? And how do you advise like companies that you fund and work with to be able to get that objective point of view?
Yeah, I think you can't just like stare at your belly button all day and only talk to the people inside the walls of your company. One just like benefit of mine from like a DNA perspective is that I am like a BD sales, like evangelist type. So like I'm in the market talking to people every single day. Like even these questions you're asking me are like getting my brain thinking of some follow-ups I need to do inside the company to make sure that we catch up on that website launch and we get our messaging, updated and all that. And so I think it's constantly like talking to the market, doing business development, trying to figure out unique partnerships, unique sources of deal flow, unique investors, right? And by doing that, you get a lot more perspective. I think what tends to happen, especially like technical, and we work in a lot in technology, right? So with a lot of like engineering founders, is they tend to think like, I know there's a problem, I'm going to go build this, and I'm going to work with my team on building towards this product roadmap to solve these problems. And if you're not looking at that outside in or obsessing over the business fundamentals, you can end up kind of like astray and having burned a lot of cash to try to figure it out. So it's the constant feedback loop from the industry and the
Mm,
market. That isn't just customers; it's third-party perspective. Like just even today, it's Monday. We're doing this Monday morning. It's 11:30 a.m. Eastern. I've had 5 calls today. I'd say 3 of the 5 were completely just market industry catch-ups with different private equity investors and a
mm,
banker, and just you're just kind of hey, giving you an update on New York IE. Want to tell you what we're up to. Actually, in one of those calls, someone was asking the focus question of me, which is a good question. I get why they'd ask it because we look like we're doing a million things. And they said, what do you think you're best at? If I came to you right now and said, what are you best at? Like if I had a startup for you, I said, we're really, really good at scaling technology companies. And he was like, oh, that's a good way to summarize it all. Like that
right.
might be go to market and marketing and building brand and demand generation and
Mm,
sales methodologies. That could be scaling technology infrastructure, product roadmap. It could be scaling the financials and the metrics and the right. So I think it's really about how do you grow and scale technology businesses. And for some companies, they might have strengths and weaknesses in different areas and need to help them with that. But I would tell any startup founder, like, just talk to the market, like continually hone your pitch, continually have the support collateral and materials behind you for follow-up, build systems and processes for your teams. Like I have BD teams, sales teams, services teams. Like I have different folks that I can bring in at any time to help, bring these conversations to fruition to some sort of engagement. And I think that's just as you grow, making sure you're out there enough to drive opportunity
mm.
and feedback.
Mm. Yeah, I like that. It goes back to the scientific method, getting the feedback from the market, readjusting your thesis based on what you get, and moving forward like that. It's an interesting blend between art and science. It's beautiful at the end of the day. It's
But you got
really,
to use data, right? I think
yeah.
our last companies I'll give you an example. Our last company's go to market motion was very like digital, inbound, self-service, e-commerce, and inside sales. So a lot of inside sales, outbounding, smaller tickets, smaller deals. This company actually closes more like enterprise level average contract values. And um, it wasn't until last year where we got really good at our own CRM tracking and data and looking at our
Mm,
funnel and our pipeline and our closed won deals. And through that data discovery and honestly eating our dog food of what we tell all our startups to do, just like get caught up on it, we realized that over 90% of our closed won deals are coming from referrals from partners and from the ecosystem
interesting.
and
Mm,
from entrepreneurs and customers and investment portfolio. And so basically we establish processes and systems and automation to more proactively engage those markets and those constituents over and over and over, and then be able to kind of ingress the flow better and drive a bigger top of funnel. Now we could have hammered our heads against building the inside sales motion and the digital channel motion that we've historically had great success in for over a decade. But for this business, it was a different model.
mm,
I think what ends up happening is a lot of people try to pattern map their experience to every company. And
yeah.
one might be a field sales enterprise play, one might be a channel sales, one might be inside sales. And like, they're not all the same. And you have to be able to know the difference.
90%, man. Do you orchestrate those referrals? I mean, how do you pull that
Oh
off?
yeah, that's what I meant. Like it was kind of like happening by like word of mouth and like just constant flow, but not with like marketing programs attached to it or collateral
Right.
and content attached to it or process and tracking attached to it or financial performance and KPIs attached to it. and even the team alignment was like kind of disparate and siloed inside the business. Even though it was working, it wasn't efficient and it wasn't optimized and it wasn't almost like on purpose enough, if that makes
Mm,
sense,
mm,
right? So yeah, so now it's all much more streamlined. Like the go-to-market motion is this ecosystem referral motion. So like, just in the last couple months, we've hosted webinars with Ernst & Young on startup liquidity and taxes. We hosted an event with JP Morgan in Boston, which 100 people came to, on raising money and capital strategies in this market climate. We just did one with Fidelity last week on a very similar topic on kind of macro market trends and venture. And so we're like
mm.
partnering up, right, with legit
Interesting.
players who have big portfolios and
Yeah.
getting ourselves more visible. And that's great for brand, but it's also great for exposure to direct clients over time.
Yeah, also you get the indirect kind of association of their authority rubbing off onto you because of that association with them, you know? So you're making those associations in the mind space of the customers. Powerful stuff.
Totally.
Yeah,
Well, and
huge.
we do thought leadership, like, like even joining, being invited to join, calls like this. Like for me, it's great time well spent. Like, who knows where this relationship between a couple Kyles goes, right? Like, who knows who listens and learns about us that never had heard of us in the past. And so I think like there's become almost like an over obsession with like metrics in tech of like, conversion metrics and pipeline metrics and funnel metrics, which I think is important as you grow and are putting lots of programs, budgets, and headcount budgets towards go to market. But I just don't think people should forget about brand and evangelism and thought leadership and community building, and
Mm,
how like it's really hard to growth hack that. Like you need to be authentic and you need to put in the time and the energy and the priorities to do it, right? So we don't have our own podcast, for example. This is like, the company's been around like 4 years. Every year I try to go on a podcast roadshow, kind of through the winter and spring, and load myself up. And we just we link off to on our website as like seasons, but they're really just on other people's podcasts, right? And so it's kind of cross promotion, rising tides lifts all ships,
yeah.
help everybody out. But again, we're very programmatic and purposeful about it. Like it's not
Mm,
uh, just for shits, right? We're doing it because we
yeah.
think it can drive brand and value to the ecosystem.
Yeah, there's a lot of balance that you're striking with all of this. There's, I'm noticing that it's a very cohesive organization that you're building. It's not one siloed sector in a lot of different ways, though. It's more than the obvious. It's a
Right.
three-dimensional, four-dimensional component to the dimensionalization of what you're building. You're kind of forming your own category in a very cool way.
Yeah, that's an astute way to look at it, honestly. And I don't know if I necessarily have, but there are a lot of like centralizing functions and behaviors and
Yeah.
processes and tracking that are existing in what could be perceived as like several different businesses in one. And I think it only can work if you sort of vertically integrate it and operationalize it like systematically and centralized. The whole other part we haven't like really dug into yet is, I mean, we have a whole venture capital seed fund that we offer to the market, and we have investors that are our LPs in that fund that are all high net worth tech entrepreneurs, operators, individual single family offices, and we invest in 10 to 15 B2B SaaS deals at the pre-seed seed stage every single year.
Mm,
And we've been doing that consistently. We have 53 investments now. There's about 45 active companies, been a handful of exits. And it's just this really interesting model where, because we're creating that like top of funnel very broadly and that ecosystem flywheel, much of that flow is also deal flow looking to fundraise and raise capital. And we have our investments and strategy team who analyzes over 6,000 deals a year for investment and does 10 to 15 at the B2B SaaS stage.
wow.
So that's also very processized, very analytical, very scientific, but it also includes a lot of qualitative research and the same sorts of market in, calling customers, calling industry experts, calling referenceable accounts, all those types of things, just to make those 10 to 15 deals a year. We don't force feed them on
Mm,
the advisory platform. They know it's there. They can use it if they want. But we sell that advisory platform to any company in the world, whether they're an investment or not. But we do tend to see that founders that want to take money from York IE want to take money from York IE because we can actually help them. And not just sit there once a quarter in a board meeting and critique them, but actually get our hands dirty, roll up our sleeves and help.
It's yeah, it's such a cool flywheel, man, because the funding it funds the profits, which then funds the more funding for more companies, and then round and around it goes. Ideally, what's your success rate look like on those investments? You know, is it because you got the infrastructure in place to actually help them improve as opposed to just the cash? What's you know, so it's I'd imagine the success rate's higher than a typical VC.
Yeah, the way I'd kind of talk about it is like, so before we launched York IE in 2019, late 2019, we had like York IE pilot vehicles, because as I mentioned earlier, I was kind of doing this moonlighting for a very long time. I think what I've noticed in the metrics specifically are that there's way less deaths. Pre-seed, seed stage startups, like, you hear terms like 9 out of 10 startups fail, right? I think because of our focus on B2B, on software, we kind of do
Mm,
vertical software, infrastructure software, cybersecurity. There just tends to be less deaths. Like, we're not chasing like the next like Angry Birds game or some consumer
right.
marketplace. It's really pretty focused. Also bring in the operational expertise. I think just sort of like flips that a bit, right? Where, we're still not going to bat 1,000, and we're not going to, these are early stage companies. There's inherent early stage risk. Companies run out of money, founder conflict, they can't find product market fit. Like, these things are going to happen. But it looks more like, 2 to 3 of 10 don't figure it out, right?
Wow.
Versus 9 of 10. And I
Huh.
think that's like one of the most prideful metrics that I think we have. The second thing is, we're not always playing like Silicon Valley growth at all costs, venture power law. Most funds just want like one company to become Uber, and sort of like if one company becomes Uber, they return capital to investors, right? We're trying to get more wins in the win column, create more of an index of early stage SaaS.
Hmm.
I still think a lot of founders sell their company for 25, 50, $100 million. They make a lot of money. Everyone's really happy. Everyone's successful. Not everything needs to be a unicorn. Some of those unicorns will emerge, and they have historically for me, and there's breakout stars that come. But we're looking more for like pragmatic growers, more thoughtful growers that can get to the mountaintop, whatever that might be to them relatively. But the only way you can do that is if you don't raise too much money, if you don't chase the vanity metrics on valuations, and focus on just building good, healthy businesses that disrupt markets. So it's a little bit of a different game. The York IE vehicle, we've had a handful of exits. We've had a handful of losses. There's been over 53 investments. Over half the investments have gone on to raise further equity fundraising, which is, a good markup, right? And a marker
Yeah.
for performance. But we're still pretty early innings, and so much of our capital and our deal flow is deployed over the last 2-3 years through this, pandemic froth, and then the 2 years since from late 2022 to now, or late 2021 to now, really. And I think but we are seeing a lot of the market reopen, M&A reopen, later stage funding rounds reopen. There's been some IPOs that are starting to come out. I think we're going to
Hmm.
see a lot of tailwinds that are back coming here.
What are some of the unicorns that you've said? You've said you've seen a few of them over the years. Give me an example of one.
Yeah, good example is there's a company called Fastly, that was an internet infrastructure company. It was a content delivery network. So they provided the infrastructure behind, Zoom as an example that
Wow.
we're on right now.
Hmm.
So, during COVID, when everyone was online, streaming video and doing Zoom calls, they were the infrastructure provider serving all that content, making sure it was fast and secure. So
Hmm.
I invested, some of the first money in. I was an early advisor, investor, and it peaked in its market cap at 12 billion. So it's just a massive,
Wow.
massive, great example. Well, there's several others and other ones that called Ascent Compliance. I mean, again, we tend to do some nerdy stuff. It's B2B software. These guys are a compliance and regulatory platform for the supply chain industry.
Hmm.
Major clients, Boeing, ExxonMobil, the likes of those. And this is a company that's now owned by Vista and Warburg Pincus, and has scaled up really healthily. I was an independent board director there, an investor. So there's like lots of good examples like that, but active portfolio, there's some high flyers. Cyberhaven's a cyber vendor. Pixera is a virtual reality training platform for the oil and gas industry. These are some high
Hmm.
flyers. So we have going Maxa AI as a AI automation platform for ERP and accounting and back office. systems. So like, the interesting part about this game is like there's like the slow and steady wins the race companies, but then there's some that truly,
Yeah.
truly break out. And they got to sustain the breakout, but we're holding and we're long in these businesses because again, early stage venture is a risk return game, and you gotta get in early, and you gotta have the conviction to stay long. And it's the life cycle. The life cycle is a 7 to 10 year run.
Wow. Well, that brings up two questions then. One is, how do you know who to invest in? And then the second is, how do you know when to leave?
Yeah, it's a great question. So, on the when to leave, we tend to go long. Like we're looking for like more like a truly strategic exit or IPO. There's more and more private equity though that's coming in operating like strategics and buying out early investors.
Hmm.
I think to date we kind of look at it like if we still maintain the conviction and we think that there's still multiples of growth from here, we'll tend to let it ride. If we believe that there's a whole different philosophy and thesis, like maybe they're going to stop trying to grow and move more towards, bottom line profitability, run it like that for 10 years, we might say, hey, maybe this is the time. We can't wait that long, right? So there's all different philosophies of
Hmm.
exits, but if it's a strategic or an IPO, we'll tend to, cash our chips in. On the early stage side, I mean, we look at, basically five core components. We look at, the team and the overview. We look at the product and the moat and the IP and the technology strategy. We look at the go-to-market and kind of customer validation. We look at the market opportunities, so like the total addressable market, the competitive landscape, some of the market in stuff we were doing earlier. And then we look at the financials and the business metrics. And it's not like they're all like, A plus, A plus, A plus, A plus, A plus across all of those, but you kind of have to formulate a point of view and an opinion by following a process, having a thesis, having methodologies, and then, finding out, what you're okay with maybe being a little bit behind. And sometimes that's areas we can just plug holes in and we have a lot
Yeah.
of operational expertise. Other times it's
Hmm.
not. We love looking at what we call founder market fit, like
Ah,
founders
that was
who
my next
who truly
question.
understand the
Yeah.
the company. Because again, at the early stage, the seed stage, you're really betting on people, right?
Yeah.
So as much as you can study their product and the roadmap of their market or their financials, like it's really about the conviction, resolve, and
Hmm.
again, that market fit you have from a founder. And those dynamics are crucial to the rapport and the relationship you have with your investors.
Yeah. What are some personality traits that you've noticed or patterns in the people that you invest in?
Yeah, I mean, my favorite are honestly the people who are just as obsessed and passionate about their company as I am about mine, right? You
Ah.
want
Hmm.
to truly, and it's not when I say a sense of ownership, I don't mean like a sense of ownership of like the cap table and like the percentage ownership. I literally mean like I like when founders are like, this is my baby,
Yeah.
and this I'm
Hmm.
betting it's like not a job to them, it's a career, and the philosophy around that are very well aligned. So that like obsession, by the way, you see this in like tier one, like professional athletes, right? It's
Yeah.
not just their athletic
Hmm.
skill, it's it's their commitment to their craft, right? And their passion for their game. And that same thing for me needs to
Hmm.
parlay into the startups we work with. Where I've seen startups not succeed or fail tends to be founders get burnt out, or they lose that passion or conviction, or we're just playing founder trying to start a startup because they wanted to start a startup, but they didn't necessarily have conviction in the idea. Or founder conflict where, I think like my founders I've known since childhood, my co-founders, right? At York
Hmm.
IE, right? Like there's pros and cons to that, but the pro of it is we are playing for each other, and we know how to communicate with one another, and we've made a choice to do this together, to blur the lines of work and friendship. Sometimes I meet founders who just met on Upwork or something, right? And you're like, how do you even know if you like each other 6 months from now? You're going into a
Yeah.
marriage together, right?
Yeah.
So we look for that a lot, and that's a lot of the time when we see stuff not work. It's founder burns out if they just run out of money, right? And
Hmm.
trying to figure out product market fit or scale.
What are some other things that, and we'll kick this off. I want to be respectful of your time here, but this is such a fascinating conversation, dude. What are some of the things that you find are patterns that failing companies have or failing founders have? You went into a couple of them, but how do you know if
Yeah.
there's a red flag on the play where you're like, I don't know, there's something up here, maybe time to exit? What are some of those?
A lot of it in this world comes down to capital and runway. So, these are metrics where, pre the sort of correction in the space, companies would raise with like, 8, 10, 12 months of runway. Right now, we're telling companies you should have 24 to 36 months of runway, right?
Mm,
And so that's a completely different game. That doesn't mean necessarily raise more. It means spend more effectively and efficiently and thoughtfully and preserve runway. So a lot of companies just run out of time, which also could mean they run out of money, right? And you need to hit key metrics and key milestones with the capital you have. And by the way, even if you're bootstrapping or not raising money, to do that well, then you need to be sustainable and profitable and breaking even, and that needs to be something that's can last over time, right? So a lot of the time it's like, we talked about the like founder burnout or founder conflict. It's also capital strategy and runway. We've also seen a lot of companies that have, and I'm using fail in air quotes. I don't know if this is going to be on video or just voice, but a lot of companies fail that are like, raise $50 million at $1 billion valuation, and they fail because they have to go sell the company for $50 million or something, right? Like I don't think a lot of times historically founders were realizing like the downside is not that protected in those scenarios, right? So the more money you raise, the bigger the valuations, the more you burn cash on fire every month, the more risk you're putting into your engine. If it works and you become the next darling, the next Twilio, the next MailChimp, the next Dime, which was my company, or Fastly, who I mentioned earlier, wonderful. But I think too many companies, because of big VC and the culture we've created, are just like chasing the outlier status and forgetting
mm,
about business fundamentals. And so we've seen a lot of failures that have failed more because of the financial engineering and the overfunding and the overheat valuation, and not necessarily because they couldn't have been a good, scalable, sustainable business.
mm.
So I don't know. That's just a couple of anecdotes for you on some of the stuff we see.
Yeah, no, I appreciate it, man. Seriously, it's fascinating to see the lens in which you look at this because you've seen it all. I mean, you've got experience in the game. You can tell by listening to you. So it's interesting to hear the patterns so that we know ourselves what red flags to look for, so that we can make adjustments accordingly. I want to ask you one final question. I could talk about this shit all day, man. I love this, but
Yeah, I love it. Yeah.
one final question for you. If I were to ask a question, that would be able to elicit the answer that would provide a ton of value for somebody listening, startup founder, entrepreneur, whatever, what would that question be? And then what would the answer be?
Hmm. Well, like I find myself talking to a lot of younger founders, or even younger people earlier in their careers, trying to figure out their journey. And one thing I always say to people is like, be the CEO of your own career, and
Mm,
play the long game, right? And make sure that whether you're running a startup or you work for one, or you work at a big company or a small one, or maybe you joined your family business, like always like how like a company would like set the big vision for yourself, and what the pinnacle is and where you'd like to be, and make sure the actions, activities,
mm,
roles, jobs, careers, companies that you're at today fit that long-term ambition. So oftentimes people come to me who are in their 40s and 50s, and they're like, man, I really wish I did this, that, and the other thing, because I'm not where I want to be at this point in time. And I think part of that is that not enough people establish that sort of long-term strategic plan and roadmap for themselves, where every next move unlocks and brings you closer to that next path for yourself. So that's just a big area I give. It can be relatable for a founder or any person in their career. It can also be relatable to a company, and ensuring you know what you want to do and what you want to build with your own company. Actually, even like when we launched York IE, I had written like a series of blogs historically on Dine's website, which is my old company, and we put them all together into an ebook that's actually on the York IE website. That's how to become the CEO of your own career, and it's actually like just a bunch of like stories. It's not it's more art than science, of course, but there's a bunch of stories in there that might be valuable to the audience to go grab. It's free; you can download it off the site, but it kind of fits that same lens of playing the long game, be loyal. Make sure you're establishing the control of your own destiny.
mm. Oh, wow, powerful, man. Yeah, you need the plan B on the map, so you know that you're making the turns that are gonna get you there as opposed to, it's interesting. It's kinda like setting sail, but having no destination. So you kinda just end up wherever the wind takes you, and, you can control that puppy to an extent. You gotta be careful with trying to force it. There's all kinds of philosophical things there, but, you gotta have the plan B, the set B point on the map, and then also you gotta be aware of where you're at to be able to know what turns you need to make, what move you gotta have, to be able to get there, so
Totally. I mean, and you can sort of revisionist history some of it too, right? Like you can weave together like your
yeah.
path, and even if it's jumpy, and everyone always tries to tell the story of how it like connects, right? But I think it's good to have that, that North Star, that or that point B, right?
Yeah, well, you need it, right, dude? So, Kyle, man, I had fun with you, man. It was a fascinating conversation. It's so cool to hear your perspective on all this. Anything else you want to add before we kick this off here?
No, just feel free to follow along. The infrastructure we've created with York IE is yours. I mean, we built it for the entrepreneurial ecosystem. So, the website is york.ie, and we're at York Growth across all social channels. And feel free to find me out there too. We put out a lot of content, a lot of free content, advice, counsel, templates, tools, to help startups grow.
Right on, man. Bare minimum, get the ebook so that you
Yeah, for
can,
sure.
yeah, right. Because there's stories in there, more art than science. I'd be interested in taking a look at that. So, brother, dude, I'll hit you up next time I need a dev team because it was a pain in the ass.
Yeah, let's go.
It's a big pain in the ass, especially if you got to put piece together like that. So nice to have the cohesive
Happy to
package.
help.
So yeah, I will 100%, man. I appreciate that, and yeah, we will keep in touch, brother. Thank you for being here today.
Thank you so much.
Okay, man. Talk soon. Bye.
All right, talk soon. Take it easy. Bye.
All right. I hope you enjoyed that podcast episode. And if you want to get a free copy of my book, go to kylesbook.com and you can get a copy there. I'll talk with you soon.